Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome. And welcome back, KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently up 0.23% to $20,087. Ethereum is up 1.65% to $15.81. If anybody reaches out to you in the comment section on any YouTube channel and they have a WhatsApp or Telegram number, please avoid them. They're in all probability scammers. I give it a 99.999% recurring chance. Let's have a look at Bitcoin and see the daily Stanfield levels. What is Bitcoin up to? We can see we've got a very strong structural support level. And let me just zoom in there a bit. At 19,987, Bitcoin is currently $20,090. It's coming up to a resistance level at 20,202, one above that at 2335, and one still above that at 2770. We have a lower support level at 19,744, and then it's a big drop to 18,597. We really want to see Bitcoin hold on to this particular 19,744 at the absolute lowest. Now, what could happen here? Let's dig into the Bitcoin charts in a little bit more detail. When we zoom out to a daily basis, we can see we're still under resistance and we're under multiple resistance levels. We're literally hugging support at the moment, but it's getting more and more concentrated. The market could literally go either way. We can see that we're currently 5.74% above the Armageddon line and about 4.25% away from some substantial resistance that could play in even if we get a rally. The market is basically trending sideways. It doesn't quite know what to do. Let's zoom in to the 2-hour basis, and what we see, we're definitely just flirting with that resistance at the moment. We're basically smack bang on, well, nearly smack bang on a support level, but we've traded below that support for quite some time. That means the support level has not been strong. We've seen so many rejections of resistance. And we've seen a further rejection of resistance for the past 6 hours. It doesn't mean we can't get above this particular resistance line and turn it to support. It means Bitcoin has been having a really hard time doing it. And what do we see here in the background? What is this mythical white line? It's the NASDAQ 100 futures. We know as crypto technical analysts, Rule 225, Bitcoin cannot escape the stock market's gravity. And where do we learn these rules and many, many more? Inside the CryptoTradingKS Masterclass. There are currently 4 partial Masterclass scholarships available. The Carey Chambers Scholarship, the Perperatum Scholarship, the Tails Scholarship, and one from myself. There is a link in the description of this video where you can apply for those scholarships. As crypto technical analysts, we look outside the crypto market, and that's really important to do. I'll show you why. In Jerome Powell's Jackson Hole speech, the Fed chairman gave very precise guidance on what the Fed needed to do going forward about inflation. They need to do everything they can to get rid of rational inattention, something that's not spoken about at all in the mainstream media. And what the Fed said, we are taking forceful and rapid steps to moderate demand. The words forceful and rapid are very, very important. And it's not surprising that the probability of a 75 basis point increase in the federal funds rate has moved to 72%. It was 69% one day ago, and 1 month ago it was 29%. They've literally swapped positions. Everybody was thinking that a 50 basis point increase in the federal funds rate would occur, and that's not on the table now. I believe that a 100 basis point rise will be statistically probable. And why is this? I've had a look at recently at other YouTube channels and they're saying, oh, jobless claims, they decline. Fantastic. It means they don't have to raise rates. This is exactly why they do have to raise rates. And if the average hourly earnings come in hotter than anticipated, that will mean wage-based inflation. There are a couple of key statistics that need to come out of the market. I think that's why the market is in a holding pattern. Things will become clear very soon. We're in a midterm election year, and of course, politicians don't like the economy tanking when they're trying to get elected. So when is the mythical date that the midterm elections actually occur? It's on November the 8th. Statistically speaking, we're coming into some of the worst months for stock market behavior, and Bitcoin and crypto are actually tracking very, very strongly and closely, directionally with the stock market at the moment. There is an expectation of increased volatility, and of course, with the midterms coming in, we would expect the markets to rally. We might get a down leg followed by an up leg. That's definitely on the cards. If the economy starts to tank, we may be seeing more negative price action. We have to keep an open mind about what's happening right now. And what are all these squiggly lines? They're the 9 sell-offs and recoveries in the S&P 500 since 1966, mapped to the current price. This can give us a good and fair understanding of where things could go. We're not at a meltdown position at the moment. And one thing that we do notice, and it depends how you trade or invest, but if we get negative price momentum, you can always see that the positive prices that come out of it are always better. So this is something to keep in mind. Since Jerome Powell did his speech from Jackson Hole, we've seen the MSCI, ACWI, that's the All-Country World Index, just plummet through its support line. And what is the ACWI? It represents 23 developed and emerging markets. The index covers $70 trillion. And 85% of the global investable equity opportunity set. So it's really important. It's actually used as a guide for global equity funds and as a guide to asset allocation. So the ACWI is really important, and we've seen it lose support. And we can see there's been some fairly climactic selling of this index recently. If we look at all the major stock indices, the NASDAQ, the S&P 500, the Dow, the Russell, we can see they're all under multiple levels of resistance. One key thing to note is Rule 4, price moves in waves. It doesn't go all down and it doesn't go all up. And when we look at global stock market indices, we can see the NASDAQ and indeed most of the other major indices were approaching, if not passing, their resistance, and now they're under resistance. And you can see this is playing out on all of the major indices across the world, except for Russia, which is enjoying a little bit of time in the sunshine at the moment. And Masterclass students, I do a deep dive on this in LV19. Don't forget, when we look at Bitcoin or any crypto indeed, what we actually want to see is the confluence or association, the directional correlation between other major indices. And the NASDAQ and the S&P 500, the Dow, the Russell, have all been showing incredible directional correlation at the present moment with crypto. We must pay attention to the main markets. So what do we actually see here? And Masterclass students, in TM6, you'll get these live charts as well. When we look through the VIX, the volatility or fear gauge of the market, fear is ramping up. Remember, price is always moving in a wave. It's coming up and down and up and down. So what we actually saw in the past trading session was a spike in volatility, which drove the NASDAQ and the major indices down, but then a falling of fear, which actually pushed them up. A lot of people will say this is the bottom. For example, we can see here that it hit that very incredibly important support level of 120.86, and we'd been waiting for this, like we'd been waiting for it to hold the 12.847 mark. But when it actually lost that, we were saying it's on its way, in all probability, down towards the 120.86 mark, and it hit that. So do we figure that this is actually the bottom and things will go up from here? We can't answer that question without looking at more information. When we have a look at bond prices, we can see they are falling, yields are rising, and when the yields rise, it actually alters the discount factor of free cash flow, which alters firm valuations, and it also alters so many other things like borrowing costs and investment costs. So when we see yields rising up like this, it's actually at the present time, and this is an important thing, sometimes Bitcoin and the markets will move with increasing yields. Sometimes they'll move against it. And everything in the market is context specific given the particular history at the time. We know that the Fed is very aggressive on raising rates, and that's what we're seeing. As the yields increase, the bond prices fall. And what are we also noticing? That gold has passed through its level of support. It's heading to 1690. And what about the dollar? It's been rallying up. We'll do the SL levels on the dollar in a minute. We can also see that oil is backing off. It was doing quite well. Now it's backing off to a level of support. We would expect a technical bounce because we've got a confluence of support levels there. Now, when we look at the VIX, it's spiking up. Of course, spiking up means the prices are coming down. And when we look at junk bonds are not showing any discernible change in trend. This doesn't go well for a bottom, not at the moment at least. Let's have a look at the SLs for the DXY, the US dollar currency index. And Stanfield levels are dynamically derived daily smart money buy and sell levels. So what we can see, we've got a fair degree of resistance playing out at that 109.779 mark. We have some resistance up at the 110.561, 110.964, and 111.078. Now, why is this important? It's important because the US dollar has been seen as a flight to safety. Basically, when it goes up, the markets, including Bitcoin, because it's correlated with the US market so strongly at the moment. And you can see Bitcoin is this blue line. The white line is the NASDAQ 100. So you can see just how in sync they are moving together and how they're literally inverting the DXY at the moment. So paying attention to these levels is within your best interests. And we can see the support below the current price, 109.196, and there's a cluster around the 108 level and then the 107 level. What it means basically, if the DXY starts to fall down, we would expect it to stop somewhere in the 108 level. That could give a temporary rally to the major indices, but it's going to find support down here. If it continues to rally up, it's got to get through this 109 level. That would be putting pressure on the DXY. You can see how it's just been rejecting. It's just not getting above that level at the present time. If it does get above that level, the 110 and 111 levels come into play. And again, we're using smart money principles to understand how all these markets intercorrelate. And that's what the masterclass is all about. As crypto technical analysts, we're always looking for confluence. So when we look at gold, we can see that the NASDAQ and Bitcoin have become directionally correlated with gold, or vice versa. They're all basically moving as a group of friends. Now, what we actually see here are the SLs. We can see that gold is under a current Stanfield level. What that actually means, these SLs are not derived from recent price action. They're derived from all price action, from the CTKS method. Now, what we're actually seeing, if gold loses this, if it can't get above resistance at this 1710 mark, that's not a very good thing for the major indices and Bitcoin, because we want everything to keep on its directional correlation. We want them to move as one. Sometimes they'll decorrelate, but at the moment they are sure moving as one. If we come down, for example, in gold and lose this 1710 level, we would expect to find support down the 1676 to 1686 level. This will give us, and this is strong, very, very strong support here. So even though we may get a dip in gold, a dip in the indices, a dip in Bitcoin, and of course a dip in your beloved alts, we have support playing out. Who would ever consider that you could look at gold's price and use that to predict where your beloved alts could be going? But that's what we do here. Masterclass students, I do a deep dive in this in TR23, and we can see the precious metals, palladium, copper, gold, silver, and platinum, all coming down at the present time. And this can give us some degree of correlation with what happens to Bitcoin. It's not a perfect correlation, but it sure is impressive. The big thing on the minds of the market and the minds of everyone are inflation expectations. And we've seen the 10-year and the 5-year come down substantially. That is actually really, really good for us, because if inflation rates for the 5-year and 10-year break-even inflation rate come down, it means the Fed won't need to be as aggressive. They are trying to break the cycle of inflation getting baked into business and personal decision-making processes. And Masterclass students, you'll get my live chart in TM4, as well as a deep dive into this. Let's see what the stock market Max Pain is tracking at the moment. And we're using the SPY here. And the SPY tracks the S&P 500 stock market index. This fund is the largest and oldest ETF in the world. What I'm doing here is tracking the Max Pain level of the SPY. So what are we actually seeing? And what is Max Pain? Max Pain has to do with options. The Max Pain level is the price at which, or the strike price at which, the majority of options expire worthless for everybody but the option writers. You can think of the option writers as the house in a gambling casino. So the option writers are always hedging and rebalancing their portfolios, and Max Pain moves with that hedging and rebalancing. We can see the Max Pain levels are up, dip a little bit and go up for about the next week or so. So this can give you a bit of positive momentum. And we can look at this and say, don't forget, these Max Pain levels change all the time, but they can give us a bit of a hint or a bit of a clue as to what will happen in the markets. And you know how the stock market, Bitcoin cannot escape that gravity, and your alts cannot escape Bitcoin either. And that is rule 45. No alt can escape Bitcoin's gravity. When we look at Ethereum, we can see, for example, Bitcoin's gravity squeezing Ethereum. Ethereum is a little bit stronger at the current time. And then when we look at the DXY, we can see that inversion happening. You can see why it's so critically important to actually look very much further than just your beloved alts. And then as we look at the NASDAQ futures, we can see how they're tracking as well. It's really important to actually contextualize your knowledge. So let's have a look at these daily SLs. Where are they playing in on Ethereum's current price? Ethereum is currently trading at 1578. We can see a support level at 1454, one at 1304, and one at 1219. Going the other way, resistance above at 1788 and 2061. There's one higher one at 2192. In this community, we're always talking about getting on the right side of the percentage. If you're on the right side of the percentage, no matter if you're on the wrong side of the trade, you can make money. And that's something that you always need to be thinking about, especially as a trader. We can see that we're 7.77% away from the 1454 mark and about 13.4% away from 1788. Now, something really interesting. What if price came down to this SL at 1454 and then jumped up to the 1788 level? What percentage would be made there? That would actually be a 22.96% increase. You can see if you buy correctly and you sell correctly, you can do really, really well. Being on the right side of the percentage, rule 359, is absolutely critical. Please let me know in the comments what your BORSOG code is for today. This is all part of your active learning. The more active learning you do, the more the market will reward you with profit. And remember, the market never knows you, but the market does know your knowledge. Over the past 24 hours, global crypto market cap has increased 0.48% to $983.49 billion. And we can see the stable coin, Terra Classic USD, doing so well, up 26.32%. Please let me know if you have any comments about that in the comments section. Celsius is up 24.49%. EOS is up 10.31%, Atom 7.7% up, Litecoin about 6% up, and Decred about 4.5% up. Looking at the greatest losers, in the top 100, Helium is down 7.6%, Leo down about 6%, Synthetics down nearly 3.5%, Nexo about 3%, Quant down 2%, and ZEC down about 1.3%. Looking at the longs and the shorts, we can see the longs were definitely buying the dip, and now they're dipping out of buying the dip at the moment, and we can see the shorts continuing to increase. Let's have a look at liquidations. Over the past 24 hours, there's been 140.79 million in liquidations across 47,263 positions. And then when we look at total liquidations across the past 24 hours, we can see about 51% short. What about the past 12 hours? Gone the other way, 51% long. What about the past 4 hours? 68% short. And what about the past hour? Around, say, 55% long. And when we look at the moment, the market is just trying to find its footing. It can't quite figure out where it's going. We've been tracking the SLs recently on Matic, and it's very interesting that Matic just came in and nearly pinged the SL level at 903. It's been doing very, very well. And you can see Matic is starting to over-exaggerate the upward momentum in Bitcoin. And we've seen this many, many times in the past with Matic. Matic can do very well. It can bolt, but it doesn't mean that we just go all in and more. We have to take caution and care with what we do. We can see two support levels, one at 826 and one at 805. There's quite a strong one at 678. But the one at the resistance level, currently at 903, is quite strong, and there's a resistance level above that at 928. Matic is currently trading at 872. It's also important to understand these Stanfield levels, or SLs, will change by the day. Equipped with your deep knowledge of the masterclass materials, you can apply Rule 252, prepared, not scared. This is really important. That's actually why we have Rule 774, master yourself to master the market. And what happens if you don't master yourself? You'll get caught in Zone 1 and Zone 2, the panic and the blame zone. When you master yourself, you move into Zone 3 and Zone 4. That's where we have make money rules and keep money rules. The question is always, how do we get out of Zone 1 and Zone 2 into Zone 3 and Zone 4? Because we don't like losing money. One way is to be committed. And Nick says, I've never been successful without commitment. So true, Nick. And thank you to everybody who commented in yesterday's video. We have the best community on YouTube. I just love reading your comments. Badger said, I see commitment as a strong, unwavering decision. You just cannot be swayed. Your decision is unbreakable, no matter how many obstacles there are. I believe that if someone is truly committed to becoming profitable in the markets, they will become so. And Tails said, it takes commitment to make anything work in our life. And thank you, Tiwana, for your very kind comment. And Meditative said, commitment sits alongside patience and knowledge. It takes patience to slowly educate and understand the landscape. And Brett said, commitment is the opposite of giving up, getting fed up, or bored. Commit and keep learning, and you will overcome knowledge gaps and mistakes and become a profitable trader. Thank you, Brett. And Dinesh said, commitment defines you as an individual. And Dinesh also says the profitability is getting into Zone 3 and Zone 4, and that's through commitment, dedication, and hard work. Well done, Dinesh. Thank you to Beardy and all the other people who commented. And Diana said something really cool. You cannot conquer what you are not committed to. You're either in or you're out. There's no such thing as a life in between. And Zoran said, if you're committed, then you don't quit. Just brilliant. And congratulations, Al and Shah. Silver anniversary next week. Woohoo! That's just awesome. And Al said some really cool things. Commitment is dedication and devotion. It's a pledge. It's part of your integrity. Making a decision once and sticking to it long after the emotions of the moment are gone and no one else is watching. Happy anniversary, my friends. And Free Dentist, what a legend. Life is getting better and better. Dedication is a positive trait. Don't use it to go too fast. Use it to maintain a daily structure. In everything you do, your commitment will not feel like a burden. And Spencer, beautiful comment. Every day I watch you, I get stronger towards achieving that positive excellence towards myself and everyone else around me. That's just brilliant, my friend. Commitment to me is about showing up here every day and investing in my knowledge and answering your questions in the comments. Also, by marking up our charts with the CTKS method, checking world events and global markets, commitment will always reap the rewards. Spencer, you're a legend. Thanks, Age of PC, for your question. How are Stanfield lines created? Do you have a video on it? I added yours to my chart and I do seem to have a confluence in those areas like order blocks, golden pockets, naked points of control, or NPOCs. So they do seem to be pretty great, but you probably don't get those the same areas, the same ways that I do. And Tails and Badger gave some really good answers. There'll be a lesson on it in the CTKS Masterclass. And Badger also said, the CTKS Masterclass teaches about that. They're not seen or hunted by anyone. And I truly believe that the CTKS technical analysis, the TA, will become a standard for the crypto space. One thing, Age of PC, to create Stanfield lines, you actually have to use the confluence of the CTKS method that's taught inside the masterclass. And it's a bit of an onerous method to actually understand. But when you understand it, you'll see things that cannot be unseen. It's just gold. The Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method, and that's a method of technical analysis that I invented specifically for crypto that accounts for the exponential implosions and explosions in price and updates normal stock market and forex TA. And you will see so many inventions inside the masterclass and plenty more coming in the LV sections. And Art, thank you for your comment as well, my friend. Just to let everybody know, Kate gets such a buzz seeing her name in there. It's really beautiful for you to say that. And Art said, commitment on a personal level requires integrity, being true to yourself and your beliefs, and being persistent in standing by promises made to yourself and others. In the markets, it's sticking in there when the markets are hammered or boring or hard to figure out like now. It takes a lot of commitment to do the hard work every day. So many good things in there, Art. Thank you, my friend. And thank you to Michael. For me, commitment is necessary for success in anything. Totally agree. When things start to get difficult, that's when you need the commitment to stay the course. Commitment is sticking with the strategy, willingness to go through near-term pain for long-term benefit, and continuing to improve through hard work and learning. The easy way out is to give up, but nothing great ever comes from this. That's a fantastic comment, Michael. And I thought what we could do tomorrow, we can talk about strategy. What is your strategy going forward? How are you going to deal with the markets? Because there is quite a degree of uncertainty at the current time. Each month, at the start of the month, I put out a new video for the Coffee Club. And this is just my way of saying thank you for your kind and generous support in buying me a coffee. And this particular video will be a ripper. It will actually give you an insight into markets that is probably unmatched. Each and every month I do special posts for the Coffee Club supporters, and they cover all sorts of different rules. And these rules sometimes only appear here. So it's really nice to be in the Coffee Club because each and every month you'll get a new video. It's just my way of saying thank you for all your kind generosity and support. You can find those videos just going to the Post tab, and I'd especially like to thank Raptors Al, thank you for your very kind comment. And Steve, thank you also. Vicente and Badger, just lovely. Thanks so much, everyone. Things could get pretty volatile, so please pop in your BORSOG code into the comments. Just doing that each and every day will absolutely progress you and get you more and more synchronized in with the market. We have some conflicting signals in the market. I would suggest this is the time to be cautious. It could turn either way, but just have the courage to get back in when things become clear. I like to say that we're actively patient. We're just waiting for an opportunity to deploy, and as soon as things become clear, we go for it, but we start small and scale. Thank you very much to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram. Thank you to the CTKS ambassadors for assisting Masterclass students. And of course, a very big thank you to you for watching and for being part of our global family. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.